Hi there, good morning. You're logged into ET now and this is Market Cafe. Thanks so much for starting your morning with us. Now this is a show where we'll take you through all the important global updates that have been pouring in overnight, all the important action that's been happening geopolitically as well. And in the second half of the show, we'll delve domestic and we'll look at stock-specific action, and we'll also tell you about the stocks that could be potential buzzers in today's trading session. With that, let's kickstart the show then with what the global handover looks like. And Lisa, take us through what the US and European markets have done.
Well, good morning and good morning to you, Snehi. It was a muted session for the market, for the US market, and a lot of moving parts actually coming in for the US market. So let's start with the retail sales data that came in hotter than expected. The retail sales rose around 0.7% and economists, they expected a 0.3% increase. So a big surprise coming in there, and that actually had an impact on the treasury yields. On the 10-year US Treasury yields that rose, that topped more than 4.8%, and this is the highest level since 6th October. So yes, higher retail sales means higher consumer spending, which has an impact on the inflation, and that is what Fed is trying to control. So yes, there are fears that the tighter Fed policy that may remain elevated for a longer period of time, longer than expected. So it had an impact on the US market as well, while Dow and S&P, that was flat. Nasdaq, it was around down more than 0.3%. So yes, Nasdaq fell the most among all the indices. So and talking about the Fed policy, the Fed minutes has come out, and as per the Fed minutes, the directors at one regional Fed, they are sorting 25 bips discount rate hike, and even Fed Bakken's commentary has come in, which says that he has backed the patient approach to interest rate policy. So, and investors will also be looking at the Thursday speech from the Fed Chair Jerome Powell. So yes, but keeping these concerns aside, we have the US earnings, which it is a solid start for the earnings, which is in full steam now. Bank of America, Bank of New York, they reported earnings, which was a beat on the estimates, and also Johnson & Johnson, they reported good earnings, but chipmaker stocks, that was under pressure because US is planning to tighten the norms of exporting AI chips to China. So yes, chipmaker stocks were under pressure in the session. And talking about earnings, we have earnings like Morgan Stanley, Procter & Gamble, ABB, Volvo, Netflix, Tesla, which will be reporting their earnings. So that's largely the handover coming in from the US market, but let's shift focus to the European market. So European market also closed mixed, and that was on the back of the US retail sales data, and also the German economic sentiment that rose by more than expected in October. So if I look at the European indices, the European indices, it was largely mixed. Because Stock 600, that was down 0.1%. DAX, it was almost flat, along with FTSE, that was down around that was up around 0.6%. So that's the handover coming in from the US as well as the European market. But Snehi, what about the crude as well as the other commodity check?
Absolutely, Lisa. We've been seeing some action when it comes to oil and crude for a very long time now. Yesterday also we did see a spike coming in on oil prices. Oil prices have edged higher as investors wait to see if the diplomatic efforts and the trip by US President Joe Biden to Israel will prevent the conflict in the Middle East from widening. Now, WTI crude oil was up almost 2% at $88.3 per barrel mark. Brent crude was also up 1.6%, managed to hold over that $91 per barrel mark at 91.4. Now, oil prices fell earlier in the session when Richmond Federal Reserve Bank Chief Thomas Bakken, as Lisa mentioned, said that higher long-term US borrowing costs are putting downward pressure on oil demand, but it was unclear how that will affect the central bank's rates and the decision that is set to take place at the end of the month. Now, remember, when interest rate hikes to curb inflation are hiked, they can slow economic growth and reduce oil demand as well. Now, providing some support to prices, US retail sales increased more than expected in September as households stepped up purchases of motor vehicles and spent more at restaurants as well as bars. So that is what's indicating a spike when it comes to demand for oil. Also, a lot of geopolitical indicators come to play when we talk about this spike in oil. Now, Biden's visit to Israel will seek to balance showing support for Israel Israel's war on Hamas and trying to rally Arab states to help prevent a regional conflict, weighing on the prices. Now, with the possibility of increased supply, Venezuela's government and opposition are set to resume long suspended talks on Tuesday. This could lead to Washington easing sanctions based on the Venezuelan oil supply. Now remember, in 2019, US had imposed sanctions on Venezuela's oil supply, and Venezuela has a sizable contribution to the global oil supply. On the other hand, you've also got Saudi Aramco CEO Amin Nasser, who said that the world's biggest oil company could ramp up production within weeks if this was required. So this also had some impact on crude prices. Now the oil market was also waiting for direction from the weekly US oil inventory data from the American Petroleum Institute that will be declared later today, and this will also be followed by more government data tomorrow. So let's see how all of these indicators pan out for crude as well as oil prices.
So now look at the events to keep a watch on for today. As mentioned earlier, the global earnings to keep a watch on are ABB, Netflix, Tesla, P&G that will be reporting on the earnings. And on the corporate action front, it's the last day to be eligible to buy TCS for dividend, and the lock-in period for Traxon Tech, RR Cable that opens today. And also on the IPO action front, between 18th today to 20th, IRM Energy that opens for subscription. And on the other event, like Snehi mentioned, US President Joe Biden will be expected to visit Israel today.
Let's also take a look at the other global stories that we've been tracking for you, and there's been no respite for war-torn Gaza as retaliation from Israel continues. An Israeli airstrike has hit the Al Ahli hospital in Gaza, claiming almost 500 lives. The mass killing at the hospital has spurred widespread international condemnation. Amid Israel's continued bombardment of Gaza, Palestinians face a deepening humanitarian crisis, with aid still not allowed into the besieged enclave. Meanwhile, US President Joe Biden is already on his way to Israel to make a solidarity visit to the country and meet Prime Minister Benjamin Netanyahu. However, the planned summit with Biden in Jordan stands cancelled. So far, unfortunately, around 3,000 Palestinians have been killed in Israeli attacks on Gaza since Hamas's October 7 attack inside Israel.
And chipmaker stocks, they took a beating on Wall Street on the back of fresh curbs on export of AI chips to China. The new export curbs are a step up from the earlier ones that the Biden administration had implemented last year. Stocks of Nvidia, Broadcom, they saw steep cuts. The new curb bans the sale of the slowed-down version of Nvidia.
Let's shift focus to some Wall Street earnings then, and Bank of America topped estimates for Q3, aided by better than expected interest income. Higher rates and loan growth propelled earnings growth for the bank. Meanwhile, Goldman Sachs profits declined amid a costly retreat from consumer banking. Remember, the bank's performance trailed its peers, the likes of JP Morgan, Citi, as well as Wells Fargo.
And let's shift focus to some important commentary from Fed Reserve officials. Fed President Neel Kashkari has said that it has taken the economy longer than expected to push the inflation levels lower, and that continues to remain too high. Meanwhile, Richmond Fed President Thomas Bakken also pointed towards the fact that there is still time for the central bank to decide on its next interest rate move, and he cited anecdotal pointing towards a slowing US economy amidst a cooling trend in inflation pressures.
And keeping it with macros then, consumers in the US surprised the street with strength in the month of September on the back of better than expected retail sales. Sales were up 0.7% on a month-on-month basis, and this is well above the street estimates. Now, gas station sales propelled the headline number. Retail sales came in strong despite high interest rates and worries of weakening macros in the US.
That's all the highlights on the global stories, but let's shift into a short break, and after break we will mark the Asian markets, so stay tuned on the show.
Hi there, welcome back, and thanks so much for staying tuned to Market Cafe. This is ET Now. Let's take stock of how the Asian markets have opened up this morning, and they're looking largely flat all across the Asian markets. Investors look to key economic data from China because China will release its third quarter GDP data. Now, economists expect the country's economy to report growth of 4.4% according to a Reuters poll. China will release its third quarter GDP product data, and so on the back of that, you can see that Shanghai is down almost 0.5%. And let's also take a look at what Hang Seng is doing, and Hang Seng will be on your screen as well. Hang Seng is also down 0.7%. Now remember, China will also be releasing its industrial output and retail sales data for September, as well as its urban unemployment rate. Let's shift focus to Australia and let's take a look at what ASX 200 is doing. It started the day rather flat but in the green, and it is still holding on to the green, but it is flat nonetheless. And unemployment figures will be released on Thursday, so that's a key metric to watch out for as well, because the unemployment rate is the basis on which the Reserve Bank of Australia will set its monetary policy. Shifting focus to Japan's and Japan's markets are trading close to the flat line. Nikkei down almost 0.5%, down 152 points, while not doing much over there as well. And shifting focus to Kospi also, then let's take a look at what South Korea's market is doing. Kospi is also down almost 0.1%, rather flat, not doing much. When we talk about our markets, then we closed yesterday slightly above those 19,800 levels, and the implied open is at 19,778, indicating to a muted start for our markets this morning.
Well, muted start for our markets this morning. That's a word coming in from Snehi. But let's look at what are the corporate as well as management voices we will have on our channel today. Starting at 9:20 a.m., Manish Gunwani, the head of equities Bandhan AMC, will be sharing his outlook on the market. At 9:35 a.m., Ajay Joshi will share the trends going on in the chemical sector, the pricing trends, and also the demand trends in the chemical sector and what to expect going forward from the results. So we have Ajay Joshi, the chemical industry expert, talking about this. Autos also will be in focus at 9:45 a.m. Aniket Mhatre, the institutional analyst of HDFC Securities. At 10 a.m., Suresh S. Iyer, the MD and CEO of Canfin Homes, will be sharing the outlook going forward for the company. And at 10:20 a.m., Chandar Agarwal, the managing director of TCI Express, will be sharing the growth roadmap for the company going forward. So this was the stellar pipeline that we have on our show today.
All right, with that, we'll slip into a...
Welcome back to the show, and we are on that part of the show where we cover the domestic events, what's trending on the domestic front. So let's move on. The centre is looking to divest up to 7% equity in HUDCO via an offer for sale tomorrow, and the OFS that will include a base size of around 3.5% and an additional 3.5% green shoe option. So listen in to my colleague Prakash Priyadarshi, who has filed this report.
Yes, an important development coming in as government will divest up to 7% via OFS route in HUDCO, and that will open on October 18 for non-retail investors, whereas retail investors can bid on October 19. So it's an important development coming in. The government will divest up to 7% equity, including a green shoe option of 3.5%. The divestment is likely to garner around 1,000 odd crore for the government, and when it comes to floor price, that is fixed at ₹79 per share. So it's an important development. However, sources are saying that the government will not crowding out the market with a flurry of OFS. In fact, a calibrated approach has been adopted when it comes to opting OFS route for divesting government share in PSUs. Sources are also saying that government will test the water. In fact, it will take a significant gap between OFS of some PSUs. Government will look at market appetite before coming out with new OFS.
All right, thanks Prakash for all of those details. Let's shift gears to auto then, and Tata Motors has given a facelift to its Safari and Harrier SUV to compete with other SUVs in the market. While ex-showroom price of facelift variant of Harrier SUV is between 15.5 to 24.5 lakhs, Safari SUV has been priced between 16 to 25.5 lakhs. Now ET Now's Sumit Chaturvedi caught up with Tata Motors Managing Director for the Passenger and Electric Vehicle Division, Shailesh Chandra, to know more about the strategy for the SUV business. Listen in to their conversation.
I mean, the Harrier Safari had been a very popular model. Harrier was introduced in 2019, and then Safari followed it with 2021 launch in its new avatar. We have seen in the last 2-3 years that there are very distinct customers for Harrier and Safari. Safari is for those people who have achieved success. They have a very busy lifestyle, but also they want to reclaim their life by spending time, quality time with their family and friends, and therefore a 7-seating configuration works well. Whereas in Harrier, you see more young achievers, who are modern day, warrior kind of a mindset. And therefore it was appealing to slightly different customer segment. And therefore we thought that we need to give distinctness to these two products. And that has gone behind the idea of giving a massive upgrade. While we saw that we had to give styling differences and bring that greater SUV kind of styling and more modern styling, we said that we will also upgrade this to the next level as far as technology is concerned, comfort is concerned, and more importantly, safety. So this is the safest car on road. So of course, with all these upgrades, there has to be increase in price. But as an introductory price, we have kept it to the minimal difference versus what these cars were priced earlier. So there has been a moderate increase in the price as introductory price.
So that was on the mega SUV revamp coming in from Tata Motors stable. But now shifting focus on the earnings season, which is in full swing and full steam. Host of numbers which are trickling in, and Sharad is here with a roundup of earnings from L&T Tech, ICICI Prudential and Himadri Specialty, which will be in focus today. Over to you, Sharad.
Well, yes, in focus we are having LTTS first. The numbers were largely inline set of numbers, but there was a surprise coming in from the margins front, and this is coming in despite the wage hikes. But the important thing is there has been a guidance cut. Earlier for FY24, the guidance was 20% growth in revenue, and now the CC growth, which is the constant currency growth, that has come down to almost 17.5 to 18.5% band. Second stock which would be in focus would be ICICI Pru Life. Largely weak set of numbers coming in, and most of the operational parameters, these numbers have come below the street estimates, and also brokerages have stated that the large channels have been underperforming, and because of that, it has impacted the APE growth. That is why the brokering downgrade is also expected. That's what the analysts have been stating. Also, the third stock in focus would be the small cap space, Himadri Specialty Chemicals. Strong set of numbers coming in. If you look at the revenue, that has actually kind of moderated on a year-on-year basis, but still above what the analyst estimates is there, and company declared its highest ever sales in any quarter. Also, the other earnings are also there, such as good earnings coming from Tata Elxsi as well as Huhtamaki, while inline numbers coming from Zensar, CI Automotive, IFL Securities and Canfin Homes. And largely, if you look at the weak numbers, we have the names of VST Industries and Syngene.
All right, thanks Sharad for all of those details. Now these three stocks will be in focus on the back of their numbers. But we're just getting word from sources that the cabinet may consider hiking the MSP or minimum support price of Rabi crop. Prakash Priyadarshi, my colleague who's tracking the story, is on the phone line with all the details. Prakash, over to you.
An important meeting of Indian cabinet is scheduled today, and we are learning from our sources that some important agendas are there for the Indian cabinet for its consideration, and the first one is with regard to hiking MSP on for Rabi crops. Sources are saying that the MSP for Rabi crops likely to be increased by in a range of 3 to 7%, and MSP on almost 6 crops is likely to be increased. Other than that, this MSP to be hiked based on a formula that has been accepted by the government in the year 2018. So it's an important development coming in, especially for the farmers. Apart from that, sources are also saying that cabinet may also accept the proposal of hiking, DRS allowances for the central government employees. We are learning that DA likely to be hiked by 4%, and that will be increased to 46%. So it's an important development expected for the central government employees and pensioners as well. Other than that, one other important agenda, which is with regard to central government employees itself. In fact, Finance Ministry has already announced, bonus for the Group B and C employees, and it is expected that the Indian cabinet may give ex facto approval of the bonus, 30 days bonus. It's the bonanza for before festive season for the central government employees. So these are the important agendas which is there for the Indian cabinet for its consideration, and it is expected we are expected that the Union Cabinet may approve this important agenda. Back to you.
Well, thank you for that. Likely increase of around 3 to 7% increase in the MSP of Rabi crops likely to come in. Shifting focus, the flagship facility of Adani Ports and Special Economic Zone (SEZ) Mundra Ports has completed 25 years, and my colleague Aishwarya Patil spoke with Subrat Tripathi, who is the CEO of the ports vertical, and he shared the company's overseas plans and the upcoming automated port plan. Here's an excerpt of it.
Well, we wish to entrench Colombo first, and you've seen that Haifa has been well acquired and it is handling adequate amount of cargoes. It's a very unique position, and in the recent announcement in G20 that it is a part of the IMEC makes it into a very big league and a very important conduit in the passage of cargoes from India through the Middle East into Europe. And as I said, evaluating many possibilities both in East Africa as well as Southeast Asia. The larger play that we look is the IOR region, the BIMSTEC region. These are two important because we look at adjacencies, and there we will look for adequate partners. We will look to say where we will have the comfort to do appropriate business in the adjacency of the neighborhood. We're evaluating, I would say, certainly.
Finally, Vizhinjam Port, which was recently talked about and inaugurated by Mr. Karan Adani as well. A word on that, and they've set a ballpark figure of 5,000 to 6,000 crore of turnover as soon as the port is functional. A word on that.
Well, Vizhinjam Port has tested us, given us many lessons on product management. We are very proud to say that the lessons that we have learned are behind us, and today we are confident after having berthed the first ship carrying the equipment and cranes on the 15th of October, which was inaugurated by the Honorable Chief Minister of Kerala in the presence of Sri Karan Adani ji, as well as all other. What is very unique about the Vizhinjam project is that we have support across. It is as if the entire spirit of Kerala, the people of Thiruvananthapuram, the people of Vizhinjam, they have welcomed us, and that's very unique, and that's actually our great strength. We will get the balance equipments. We are looking to commission the port sometime in the calendar year 24, maybe soon enough in the month of March and April. Thereafter, you will know that it would be India's first semi-automated container terminal, which will thrust us into the larger league of semi-automated ports across the world. And when we do that, the unique position deep down in the peninsula, very close to the international maritime shipping lines, very unique position to exploit and become India's answer to transshipment hub. So it will become a very large transshipment hub. As we speak, we are seeing an alignment of forces coming towards Vizhinjam. The excitement in which the trade, the shipping lines, and the larger EXIM community has, evinced interest. It only shows us as to what we go forward. And in the phase 1, we are expending close to about 7,700 crores. In phase 2, which we look to develop more than 800 meters of quay length, we'll have a mega transshipment port, and something that India needs to be truly proud of, and India's answer to the entire transshipment that we're looking for.
All right, that's the word coming in from the management at Adani Ports. But with that, it's time for the breather on this edition of Market Cafe. You don't go anywhere. We'll be right back. ET now, this is Market Cafe. Now, Bajaj Finance was a stock in focus yesterday because it reported a largely inline set of numbers for the quarter ended September. Let's go across to my colleague Vamakshi for a detailed fine print of those numbers. Good morning, Vamakshi. Break down those earnings for us.
Well, yes, an inline set of numbers is what Bajaj Finance has reported this time around. Yes, the expectation was of a steady but strong quarter from Bajaj Finance, and the company has delivered. Now, let me first take you through all the important numbers. Net interest income for the company came in at 7,197 odd crores. Now, this is definitely in line with our estimates, and in fact, this is a jump of almost 30% when we compare it on a year-on-year basis. Apart from that, when we talk about the net interest margin, that has seen a compression of almost 14 basis points sequentially, and that was mainly on account of a rise in the cost of borrowings. In fact, the management in their con call also highlighted that they are expecting another 25 to 30 basis points of NIMS compression in FY24, and this would mainly be driven by the rising cost of funds. Apart from that, operating leverage has started playing out for the company, and as a result you can see the impact play out on the pre-provisioning operating profit, which has again come in line with our estimates at 5,835 odd crores, an uptick of almost 30% on a year-on-year basis. And in fact the management also highlighted that the operating leverage could play a key role in offsetting the pressure on the net interest margin. Moving on to the provisions, they have come in higher, nearly 8% sequentially, standing at 1,077 odd crores. The net profit stood at 3,350 odd crores, spot on with our estimate, and in fact that is also witnessing a jump of almost 28% on a year-on-year basis. Moving on to the asset quality, yes, we did see a very slight bit of deterioration as far as the GNPAs are concerned. They have risen by from 0.87% to 0.91% sequentially, but the net NPA number has been quite stable. It is currently at 0.31% and has been flat sequentially. Apart from that, the company also commented on the fundraise, and they believe that the fundraise is essential given the strong growth in Bajaj Finance, the housing finance subsidiary, as well as the launch of the new product lines. They also highlighted that the listing of the housing finance subsidiary is nearly 8 quarters away from now, and in fact the management has also highlighted that they have requested for extension. So all in all, the management has highlighted that they witnessed very strong growth momentum in the first half of the year, which was the strongest in the last 4 years. They are quite confident on delivering on the growth prospects as well. So all in all, it does look like a strong, steady quarter from Bajaj Finance, in line with what the street was expecting.
Thank you, Vamakshi, for taking us through the number of Bajaj Finance. Bajaj Finance reported their numbers post-market hours yesterday, so it will be in focus today. But Vamakshi, stay with us because there are brokerage notes coming in from Jefferies, Nuvama. So what are they saying?
Well, yes, let me first start off with a brokerage note that has actually come in from Jefferies, and that is on Kotak Mahindra Bank. They have highlighted that the stock is below COVID low price to book. The weaker CASA growth as well as loan growth are not able to support the stock as well. And of course, there are concerns around the succession, and those concerns they have highlighted are valid, and they believe that they cannot ignore the valuations that the company is trading at, which is nearly 2.5 times 12-month forward price to book. Now, when we compare it to banks such as HDFC as well as ICICI Bank, it is nearly at a 13% premium, but this is less than 30% premium pre-merger of the HDFC Bank. There is scope that there could be some clarity on the succession, and that this could in turn help the stock to re-rate, and that is the reason why Jefferies has actually maintained a buy rating on Kotak Mahindra Bank with a target price of 2,400 rupees per share. Moving on to L&T Finance, we have a brokerage note coming in from Nuvama. They have highlighted that the company is making transformation progress that is quite faster than expected. Wholesale loans, the successful rundown is definitely silencing naysayers. CEO designate that is a new CEO will come on board from next year itself, and he does have a very credible track record, and that in turn instills confidence in the stock. Therefore, Nuvama has initiated coverage on L&T Finance with a buy rating, target price of 160 rupees per share. And lastly, let's also focus in on Maruti Suzuki. We have a brokerage note coming in from Morgan Stanley. Issuance of shares for SMG plant is expected to be done at nearly 10,420.85 rupees per share. They believe that the acquisition will simplify reporting as well as the ownership structure. They believe that an EPS dilution of nearly 4% is expected in FY25 on the back of that. Overall, they have maintained that this is a neutral to positive event for Maruti Suzuki, and that is the reason why Morgan Stanley has continued to maintain their overweight stance on Maruti with a target price of 11,963 rupees per share.
Well, thank you, Vamakshi, for that, taking us through all those stocks that will be in focus on the back of the brokerage radar. But shifting focus on the agrochem space, we have collated some data, and the focus is on UPL because as per the data collation, UPL is the cheapest Indian chemical player among its direct peers. Now, they don't have direct listed peers in India, so we have compared it with the global peers, and as per the 12-month forward EV/EBITDA basis, UPL is at 6 times compared to other players like Nufarm, BASF, Bayer, FMC that are trading anywhere between 6.5 to 9 times. Now, there are concerns on these global players. If I talk about Nufarm, they recently downgraded their profit guidance and they expect the EBITDA to decline after they previously estimated and guided for a modest underlying profit growth. And even Corteva, they highlighted in their last earnings call, they highlighted headwinds in the crop protection business from, beg your pardon, from industry-wide in the inventory destocking, and BASF in their last earnings call, they had cut down their full year's earning guidance owing to weak demand. And even FMC, they flagged off the volume pressure from the inventory reduction, and that will be weighing on their EBITDA. But analysts, they are quite bullish on UPL. They say that the UPL's revenue as well as EBITDA growth, that will rise owing to improvement in the prices as well as the demand environment. The stability in prices also will have a positive impact on the inventory concerns which was hovering the company since the last few quarters, and the decent volume uptake that will happen in third quarter FY24 onwards, and mainly it will be on the back of the demand kicking in from the NAFTA as well as LATAM region, and the realization growth that will happen from Q4 24 onwards. And they also expect the company to reduce their debt by around $300 million. So yes, UPL will be in focus, and their growth guidance also, last time they had downgraded their guidance, their growth guidance for the revenue that stands at around 1 to 5%, while their EBITDA growth guidance that stands at around 3 to 7%. So yes, UPL is the cheapest trading stock in terms of valuation compared to its global peers.
Thanks, Lisa, for taking us through that. Now, we also got a bunch of Nifty 50 companies that will be declaring their Q2 numbers today. And let's start by looking at IndusInd Bank. Now, while the top line is expected to rise, margins are expected to be largely flat. So what is the street penciling in when it comes for this banking major? Harsh is joining in with what to expect. Harsh, good morning.
Right, IndusInd Bank expected to deliver numbers. Let's first take a look at how loan growth has really shaped up. 5% sequentially, 21% year over year. Solid loan growth clocked by IndusInd Bank. But even more significant is on the deposit side of things. 4% growth on a sequential basis delivered by IndusInd in its operational update. 14% year over year. So whether that deposit growth can hold up is the real question, and that is probably something that will come out of the management commentary. Let's look at the broader P&L. How will it shape up? It's expected to be a good quarter for IndusInd overall. 16% growth on the NII front with NIMs absolutely flat. So you're expecting NII to be around that 5,000 crore mark, maybe slightly higher than 5,000, but roughly 5,000 crore. Let's also look at operating profit expected around the 4,000 crore mark from IndusInd Bank in this quarter. We're also expecting around 1,000 crore odd of provisions to come through. Provisions expected flat sequentially, around 990 crore was the number same time last quarter. So you're expecting provisioning to remain, sanguine, good benign credit cost environment, and therefore credit costs also expected to remain well in control. Profit after tax expected at around the 2250 crore mark post that provisioning and taxes. So you're expecting profit after tax growth of around 20+%. So healthy on all of those counts. IndusInd Bank, the NIMs will be, of course, in focus. This is a quarter where margins will be in focus. ROA is also expected to see some amount of uptick when I'm looking at it year over year. So expecting a good quarter overall from IndusInd.
So good quarter coming in from IndusInd Bank, which is expected to declare their results. But shifting focus on another earnings candidate, an IT earnings candidate, Wipro is set to deliver their Q2 numbers. Now, what is the street penciling in on their growth, on the margin, as well as the commentary? What is it to watch out for? Anisha is joining us with more details on the same. Over to you, Anisha.
Well, yes, on Wipro, we are used to seeing a bit of a disappointing set over the last 2 to 3 quarters. Hopefully, this time will be different because the street is already penciling in a decline for the quarter. The management had guided that there could be a decline of almost 2% to a 1% growth coming in this quarter, and we are expecting the number will be towards the closer end of that range. In fact, on the constant currency basis, there might be a decline of almost 1%. IT service revenue might dip by almost 1% when it comes to the dollar revenue as well. Margins are expected to stay steady around that 16.2% mark. because the company has delayed the wage hike. So that impact will come only in Q3. So on account of that, this quarter, the company might get saved. The profitability is also expected to hold on to 2,800 crore mark. In terms of the other internals, watch out for the order inflow. Last couple of quarters were strong at close to $4 billion. That might slip to $3.5 billion. And also the guidance for Q3 is going to be important. Wide range on the street, and that should come up for you on the street. Right from a minus 1% all the way to almost 2% kind of growth is what the various brokerage and the analysts are expecting. Let's see which one of them is correct tomorrow.
Well, that's the take on Wipro and what's expected from Wipro today. But Anisha, LTIMindtree, that's also going to declare its numbers today. So what is the street penciling in? What's the expectations?
Well, yes, LTIMindtree is expected to report its earnings. The management, remember, after the last earnings, when it was a muted set, had already said that a double-digit growth in FY24 is a tall ask, but at least on a quarterly basis right now, we are expecting a growth of around 1.5%. The rupee revenue is expected to jump up by 1.9%. On the constant currency basis, 1.4 to 1.6% is kind of range that we are working with. Margins might see a bit of a sharp contraction, almost 100 to 150 basis point kind of contraction can come in, and that's on account of the wage hikes that the company has taken. So that might impact the sentiment a bit, and that's the reason the profits might slide by almost 2 to 3%, and the number might come in closer to 1,120 crores. The growth will be led by manufacturing. The high-tech vertical is also expected to report a steady growth, but there might be some softness which might continue when it comes to the BFSI segment. The deal wins are also expected to moderate in Q2 versus the kind of performance that we had seen in Q1. Going forward, of course, the management commentary about the outlook, the state of discretionary spend, the deal win and the pipeline, as well as the headcount trend will continue to be fairly important. And of course, the management commentary about the 17 to 18% margin as far as the exit rate for FY24 is concerned is an important monitorable.
Well, thank you, Anisha, for taking us to what to expect from both Wipro as well as LTIMindtree. But now shifting focus from IT to Auto. In a major earnings to watch, Bajaj Auto will be posting its Q2 earnings today. And let's go across to Srishti, who tracks the sector closely, to get what the street is expecting from Bajaj Auto.
Yes, talking about Bajaj Auto, this time around we are expecting a decent set by the company, because do note that this time all the festive period is coming later this particular year. So better to compare the numbers on a sequential basis rather on a YY basis, because sequentially we are expecting a jump across all the parameters. In a single digit growth is what we are expecting onto the top line as well as bottom line, and the key to watch will be the margins. This time we are expecting a 19.4% EBITDA margin by the company, and that will be supported by three factors. Firstly is the price hike that the company has taken. Other than that, the kind of product mix, and thirdly, the cool off in the RM cost. All these three factors will support the margins of the company is what we are expecting. About the volumes, not much of a support coming in on a sequential basis. There was just a jump of 3% sequentially, but when we talk about the domestic volumes, they were absolutely flat quarter on quarter, but exports have seen a bump up of 8% on a quarter on quarter basis. So these will factor into the numbers for sure, but key to watch will be the management commentary onto the festive demand, the kind of bookings that they are getting for two of their new offerings with Bajaj Prime Tyre, as well as the rebound in the export market. So all these will be a key to watch out for, but definitely an eye out on the margin figure of Bajaj Auto. Back to you.
All right, Bajaj Auto in focus on the back of its numbers. But like we mentioned earlier, China was expected to release some data, and that's out now. China's third quarter economic growth came in stronger than expected, boosting hopes that the world's second largest economy will meet Beijing's annual target this year. Retail sales up 5.5% versus the 4.9% estimate. Industrial output up 4.5% versus the estimate of 4.4%, so beating expectations there. When it comes to GDP, China's posted a 4.9% growth in the July to September quarter on a year-on-year basis. That is stronger than versus what the economists were expecting at 4.6%. With that, it's a wrap on this edition of Market Cafe. Thanks so much for watching, but you don't go anywhere because the market will take all the action.